Welcome back to Explain the Charts, your go-to channel for comprehensive market insights. Today, August 5th, 2025, we're placing Alphabet, ticker Google, under an intensive spotlight, dissecting both the latest news and its intricate chart patterns. Before we dive into the technicals, let's set the stage with the current market narrative surrounding Google. Wall Street analysts consistently project a positive outlook, with a consensus rating ranging from moderate buy to a strong buy, reflecting a generally optimistic view of Alphabet's future. This sentiment is particularly strong for Google, as its consensus rating score of 2.86 actually exceeds the sector average of 2.67 for computer and technology companies. The average 12-month price target hovers between $211.39 and $213.33, suggesting a substantial upside of over 7% from GOOGL's current trading price. Some analysts are even more bullish, with the highest forecast reaching an ambitious $240, while the more conservative low forecast sits around $172 to $180. Providing a clear range of expectations. In recent corporate news, Google notably lost its appeal in the Epic Games lawsuit, a development that could introduce regulatory headwinds and dampen investor enthusiasm in the short term. However, balancing this, Google also recently announced historic deals with U.S. utilities, a strategic move that highlights diversification and potential new revenue streams in a stable sector, which is fundamentally positive. This complexity necessitates a meticulous approach, combining fundamental understanding with precise chart analysis to identify the most probable paths forward for Google. Now, let's transition to the one-day chart to observe the broader price trends and significant levels over the past year. From a macro perspective, Google has been entrenched in a robust uptrend, consistently marking higher highs and higher lows since March 2024, when it was trading around the $150 level. This sustained bullish trajectory, culminating near its current price of $195.04 as of August 4, 2025's close, is a testament to strong underlying demand and positive market sentiment. A foundational support level for Google clearly resides around the $150 to $155 zone, a critical area that provided a solid bounce in both early March and then again in late March/early April of 2024, acting as a historical floor for price action. Further up, a crucial mid-range support level can be identified around $170 to $172. This zone saw multiple price reactions and acted as a trampoline for subsequent rallies in late 2024 and early 2025, confirming its significance and the presence of eager buyers. On the upside, the stock's previous peak around $206, recorded in February 2025, now stands as a formidable overhead resistance level that bulls will need to conquer for further advances and a retest of all-time highs. To illustrate how significant news can impact price action, let's zoom in on a dramatic reversal event on the daily chart, specifically during early May 2025. On May 7th, Google experienced an intense sell-off, with its price plummeting from an open of $164.08 to a close of $151.38, representing a staggering 7.74% single-day drop. What's crucial to note here is the exceptionally high volume on this day, reaching over 127 million transactions, which is almost 5 times its average daily volume, strongly suggesting institutional selling or a widespread negative reaction to a major news event, potentially aligning with the broader question of why has Google dropped that we noted in Google search results. However, the resilience of Google was demonstrated shortly after the sharp decline. Just a few sessions later, on April 9th, it recorded a remarkable 9.9% gain with similarly high volume, hinting at a powerful short-term reversal or significant positive news, perhaps related to the U.S. utilities deals. Turning sentiment around rapidly. This V-shaped recovery underscores how quickly market perception can shift and the importance of monitoring major news announcements closely, especially for their immediate price impact and subsequent follow-through. Moving to the 1-hour chart allows us to refine our analysis of recent price movements and identify more immediate, actionable levels for short-term traders. Over the past few weeks, we observe a clear upward trajectory for Google, climbing steadily from approximately $188 in late July to its present position around $195. This short-term rally is characterized by a series of consistent higher lows, indicating persistent buying interest and a firm bid from market participants, suggesting momentum remains with the bulls. The immediate, crucial support level on this time frame can be found in the $190 to $191 range, a zone where price has repeatedly bounced, validating its strength as a floor for current fluctuations. Overhead, minor resistance levels are currently being encountered around the $195 to $196 area, where the stock faces some selling pressure as it attempts to break out of its recent consolidation phase. It's encouraging to see that these recent upward moves have been accompanied by healthy, consistent volume, lending further credibility to the short-term bullish bias and indicating strong participation. Should Google decisively clear the $196 hurdle on this hourly chart, it could open the path for a rapid ascent towards the daily resistance levels mentioned earlier, suggesting significant upside potential. Now, for an even finer perspective, let's drill down to the 15-minute chart, which highlights the minute-by-minute battle between buyers and sellers. In the most recent trading hours, Google appears to be consolidating within the tight range of $194 to $195, following its robust rally during the daily trading session on August 4th. This current period of horizontal movement, especially when observed with a slight decrease in trading volume, suggests a momentary pause as the market digests the recent gains, potentially leading to a small retracement. For short-term or intraday traders, the $194 level represents a critical immediate support. A decisive break below this point could trigger a quick retracement towards the $192 to $193 zone, where stronger short-term buying interest might re-emerge, offering a potential dip buying opportunity. Conversely, if bulls can gather enough momentum to push and sustain price above $195 to $196 on this 15-minute time frame, particularly if volume picks up, it would signal a continuation of the upward momentum, potentially targeting the next psychological resistance at $197 or higher. Monitoring volume closely on these smaller time frames is paramount, as a breakout or breakdown on thin volume might be less reliable than one supported by strong institutional participation. Synthesizing both the fundamental news and the technical chart patterns, there are compelling arguments for a predominantly bullish outlook on Google in the medium to long term. The overwhelming, by consensus from Wall Street analysts, coupled with their ambitious price targets extending up to $240, signals strong professional confidence in Google's innovative capabilities, particularly in the competitive AI landscape and its enduring market leadership. The established multi-month uptrend visible on the daily chart, characterized by consistently forming higher highs and higher lows, provides a robust technical foundation for continued price appreciation. Recent strategic wins, such as the historic deals with U.S. utilities, underscore the company's ability to diversify and secure new revenue streams, further bolstering its financial prospects and long-term stability. However, it's crucial not to ignore potential short-term headwinds, specifically the implications of the Epic Games lawsuit, which could lead to regulatory pressures, fines, or unexpected operational costs down the line, introducing an element of risk. A bearish stance for Google would become more defensible if we witness a significant technical breakdown, such as a sustained close below the critical $188 support level on the daily chart, especially if accompanied by abnormally high selling volume, as this would indicate a major shift in market structure and a potential reversal of the bullish trend. In the immediate short term, if the stock struggles to break through and hold above the $195 to $196 resistance zone, particularly on diminished volume, a healthy consolidation or minor pullback could occur. potentially offering more attractive entry points for long-term investors or swing traders seeking a better risk-reward. When contemplating entry and exit points for your trades, precision and confirmation are key to maximizing profits and minimizing losses. For those looking to go long, consider establishing positions on a retest of the $190 to $191 short-term support on the hourly chart, as this has proven to be a reliable bounce zone, offering a favorable risk-reward ratio. Alternatively, a powerful and decisive breakout above the $196 resistance on the daily chart, confirmed by a significant increase in buying volume, would signal strong momentum and a clear path higher, justifying a more aggressive entry strategy for momentum traders. Conversely, for traders considering short positions or wanting to protect existing profits, a sustained breakdown below the $188 daily support, especially if paired with a surge in selling volume, would be a compelling bearish signal indicating a potential shift in trend or a deeper correction, prompting a defensive stance. Always integrate fundamental news into your technical analysis. Keep a close watch on any new announcements regarding Google's technological advancements, particularly in the competitive AI space, or any further regulatory scrutiny, as these catalysts can swiftly change market dynamics and invalidate technical setups. Long-term investors might find dollar-cost averaging a suitable strategy, consistently buying into positions over time to mitigate volatility and benefit from the overall bullish analyst forecasts for long-term growth. For short-term swing or day traders, implementing strict stop-loss orders just below key support levels identified on the hourly and 15-minute charts is absolutely essential to manage risk effectively and preserve capital in this dynamic environment. To summarize our in-depth analysis of Google, let's recap the most important price levels to monitor closely in the coming weeks and months. On the upside, immediate resistance resides at $195 to $196, a level the stock is currently contending with and needs to decisively break. Beyond that, the significant historical resistance from its February 2025 high is at $206, and the ultimate upside target, according to the most optimistic analyst forecasts, is $240, representing substantial growth potential. On the downside, critical short-term support is visible at $190 to $191 on the hourly charts, providing a first line of defense against minor pullbacks. A more robust and pivotal support level on the daily chart is found at $188, which has held firm on several occasions, making it a key psychological and technical level. Should this $188 level decisively break down, the long-term support zone stretches down to $170 to $172, aligning closely with the lowest analyst price target and indicating a significant retracement. Our unbiased prediction is that a decisive break above $196, especially with sustained buying volume and positive broader market breadth, carries a high 70% probability of propelling Google towards the $206 resistance and potentially higher towards the $211 to $213 average analyst target. Conversely, a clear and sustained breakdown below $188, particularly if triggered by adverse regulatory news or broader tech sector weakness, holds a notable 60% probability of sending the stock to retest the $170 to $172 support zone, signaling a period of bearish dominance. Looking ahead, continue to monitor Alphabet's upcoming earnings reports, any further legal developments regarding antitrust or content, and crucial updates on Google's artificial intelligence initiatives, as these will be primary catalysts for future price movements and trend determination. Thank you for joining us on Explain the Charts, and remember to always conduct your own thorough due diligence and manage your risk effectively before making any trading decisions in the complex financial markets.